So we have a firmer dollar today, especially led by dollar yen rallying through some important levels. We have that descending trend line we've been focusing on so much recently giving way, and the next broad band of resistance, very important, above 102 up to 103.25, the so-called Ichimoku cloud, which has held very well since the beginning of this year on a number of tests. So don't underestimate the importance of that technical level. What is driving the action here? A couple of things. We've got a bit of a relief on this whole Deutsche Bank story. No broader sense of systemic risk there. As well, we've seen the US data out, the ISM manufacturing bouncing back a little bit, and US rates a bit higher, with the Bank of Japan's new program fixing the yield curve supposedly out to around 10 years. Anytime rates tick up, this is a net positive, for example, for the dollar versus the yen. As well, I think you just have a sense that we saw the market putting on a knee-jerk dollar-yen selling trade after the Bank of Japan and FOMC meetings on September 21st. The near-term sense being that the Bank of Japan is not announcing any new easing. However, the shift of focus to the yield curve does allow for a vast expansion of purchases if the Abe government decides to do fiscal stimulus. So those longer-term implications, and please read my FX update today, more thorough look into this. The longer-term implications are for a weaker yen if the government prints money, and if we do see an expansion of the nominal economy and a repression of real rates in Japan. So, interesting combination of some potentially long-term technically interesting things, fundamental things, and some short-term technical things. For now, of course, we could just see this as a squeeze up to the 105 to 107 area if this rally holds. We do need to see that fiscal stimulus and those the longer-term implications of yen weakening to come in before we can start calling a more significant sell-off in the Japanese yen. So for now, maybe short-term technically driven, longer-term with some fundamental support for this move as well.